I've often been told that it is better late than never. And we're a little bit late looking at these earnings, but we're going to look at Shopify earnings. So this is a stock here that at one point today was up pretty big. So at one point today, this guy started out up around 15 to 16% up. But for the day, ended up right around 7.8% up. So overall, big move upward. And I did mention this is one of the stocks that I believe has a decent chance of moving because of earnings. Obviously, just because of the fact that this is hear me out, this stock is a bloated stock. And what do I mean by bloated? Well, let's look at this 5-year chart, and let's look at since 2019. What has this stock done? This thing's gone up 300%. Holy crap. Holy crap. In a year, this thing went up 300%. That's crazy. That is literally absurd. So now the question is, let's take a look at these earnings and see what is going on that justifies this crazy stuff. So let's see. First off, we see that they posted a non-GAAP EPS of 43 cents, which reached by 19 cents. Good. And a GAAP EPS of 1 cent. So, flat. There is, but they beat by 32 cents. So they were expected to not profit, because everyone knows you really should only care about that GAAP EPS, because that's really what people are looking at. To be fair, they did not fail in terms of making profit, which is good, especially when you consider they beat by such a large number, and hear me out, revenue of 500 million, but increased 46.9% year. That's a funny number. 46.9% year over year. Beat on that as well. But then you look into some of the things, such as the market cap, trading at a market cap of 61.5 billion, but an annualized revenue of what looks like to me around $2 billion potentially. So you wonder where that valuation comes in. And as I mentioned, just so many stocks right now, and I guess you really have it all over the place, regardless of what's going on in the market. Some of these big tech stocks just get absolutely bloated beyond belief, and the valuation is it's unseen to me. And I understand why people invest in it. It's because of the hype factor. This is a up and coming stock, really just rocking it, and people are investing in big. So I'm not shocked. I just think the valuation is completely insane on this thing. Just completely insane. But it keeps going up because people keep buying it. People keep believing in it. I'm just not the kind of guy to buy those super overvalued stocks, unfortunately. That's not the kind of guy I am. But you see Shopify up 7% after earning Smasher. Yeah, that's the dumbest thing I've ever seen. Q4 EPS rise higher than even the highest estimates turned in by an analyst. Good for them. GMV was up 47% during the quarter to 20.6 billion versus a 20.3 consensus. A subscription revenue of 183 million, and merchant revenue of 322 million were also both ahead of expectations. Look at that. Looking at Shopify sees quarter one revenue of 440 million to 446 million, which is obviously less than this quarter, but quarter four, again, with a lot of these big tech stocks, quarter four is the big year. It is the most popular time of the year for people using these type of services like Shopify. So nothing crazy there. So they should expect a little bit of decrease in revenue, right, from quarter over quarter. Nothing crazy, but overall that is a year-over-year change, an increase for sure. And full year guidance of $2.13 billion to $1.6 billion versus a consensus of 2.12. So overall, their consensus for quarter one revenue is pretty much in line, but their consensus for full year revenue is definitely above estimates, which is good for them. And that's why you see, again, stock price grow, because they kind of beat on all aspects. As I mentioned countless times, when you're looking at earnings, you're looking at EPS, revenue, and guidance. That's really the main things people are looking at there. If you're posting a good EPS and revenue, people aren't going to really care. Investors aren't going to buy in unless you have good guidance to back it up. And sometimes good guidance can just back up a bad EPS or revenue report. Frankly, that's just how the market goes. Let's take a look at their little presentation here. With this chick sitting around here, she's got a little bun in her hair, and she's got a bunch of knickknacks on her shelf. I don't know what her problem is, but it's not very OCD helpful. Really needs to have less things on that shelf. There's just too much going on there. And that printer, it's just printers crammed in there. Is that a printer? It's got to be a printer. What the heck else would it be? Just too much stuff crammed in there, okay, lady? We're not reading 20 years. Retail is changing, period. That's it? Just a period? I feel like you could do something cooler with that. One platform, every channel, any device. Single integrated back office through Snow Devil, powered by Shopify, which includes payments, capital, marketing, analytics, apps, inventory and fulfillment, order management, and shipping. All of it integrated in a single app. So obviously you see basic, obviously meant for these entrepreneurs, is a $29 per month package that they're offering. Good for them. So the normal Shopify, though, is for smaller businesses, which is right around $79 per month. And the advanced for really meant for small businesses, is $299 per month. Shopify Plus, though, is $2,000+ per month, and those are really meant for big brands. Big brands. So anyone who wants to make more money from their site, then they pay for it. That is their addressable market, is what they say. So they're saying that from small business, their total addressable market is $78 billion worth. $78 billion. I mean, that's crazy. Just for small business. That's really cool. So merchants defined as retailers with less than 500 employees includes commercially located businesses, sole proprietorships, and home-based businesses. Does not include early stage entrepreneurs and entrepreneuries. That's just really explaining. Really just explaining what's going on there with that category of small business. So let's see, from acquisition standpoint, you see they're casting a wide net. So how people spread the word using this lovely Shopify. Obviously entrepreneurs, really from bottom to top here. So obviously you start with the word of mouth spreading. Search engine marketing is when you get a little bit higher, so people can search for your product, and you make it show up higher on the list. Digital advertising, pretty simple. You put out an advertisement on a website. Nothing crazy there. Shopify blog, so on their website, putting a blog about your business. Content marketing specifically, again, targeting a specific piece of content you produced or a item that you're selling. So with the larger brands, they typically tend to do global in-person events because they have the more money to really afford that with that program. Through partners and affiliates, and the Shopify Plus sales representatives helping you sell your product. Do you know that Tanya Larson designs contemporary Northern Indigenous adornment based in Gwich'in culture? I said that right. Don't doubt me. Created with Land-based materials. Tanya sells her artistic work through an eponymous. I can't speak today. I'm sorry. Through her eponymous online store and uses uses Shopify payments. Good for her. Ooh, look at this lady. Noto Botanics was born. Do they grow weed or something? This lady looks like she smokes weed. Is that rude? Noto Botanics was born from a desire for natural and gender fluid multi-use cosmetic line. What the freak is the purpose of that? It's just its own thing then. God, what a waste of business. What a waste of a business. Sorry, Noto. Eat it. We don't care about them. You're not a small business. You're garbage. So your larger brands, you see you have some good old Heineken, Lessa, and Jameson, which were some smaller brands that worked their way in, but some of the larger brands using this would be KitchenAid, Clark's, Staples, Universal, Fashion Nova, Rebecca Minkoff, The Brick, don't know what is that, Gymshark, Nestle, and General Mills all use Shopify. Can you believe it? So they have an extensive partnership ecosystem have 3,700 apps, extending the product capabilities. Cool for them. 24,500 agencies and web designers referred at least one merchant to Shopify in the last 12 months. That's cool for them. People obviously referring to Shopify, and you see that in the revenue growth. They're a growth-minded culture. They're Canada's top 100 employers of 2020. Top 100, it's not insignificant, but it's also 100. So you'd like to be in somewhere in the top 10 potentially, but it's good for them. So they recruit talented, deeply caring individuals, hack days and innovation engine, invest heavily in personal growth and development, and global reach. The numbers. So, to be fair, they put this together like a piece of garbage. But let's take a look at the market position. Sorry, I didn't mean to bash them, but this is overall. They put a presentation together nearly from an 8th grader, and they called it their report. That's rude. It's rude. I'm sorry. So you see Shopify second on that list. Market share based off the 2019 U.S. GMV, which is excluding merchant sales. Cool for them. They are taking up 5.9% of the market. But Amazon here has 37.3% of the market, and that's retail e-commerce. Amazon obviously number one, no shocker. eBay right behind them, right behind Shopify, that is. Walmart behind them. Apple. Then you get into the lesser ones. Obviously not as important because it's not the main function of like a Home Depot or a Best Buy. Online isn't their main focus. But maybe one day. Strong and consistent revenue growth. There's no doubt about it, and you see it. From both merchant solutions and subscription solutions. No doubt, obviously, the more merchants you have, the more subscriptions you sell. That's just, simple math right there. This is consistent growth from $205 million in 2015 to 2019, total revenue of $1.57 billion. So that's really good numbers in growth there. And that's just over a 5-year span. They went ahead and not only 5 times the money, that's right, they're going to go ahead and 7.5 times, nearly 8 times the money, 8 times the revenue in 5 years. Very good for them. You don't typically see revenue growth of that stature. It's pretty exciting for them. And that's really where you see the stock price, just saying. And just quarter over quarter, they're going to show a 47% increase. Or year over year, that really is. So, annualized growth rate of 52% of merchant revenue, or monthly recurring revenue, I believe is what they were going off of there. Cool for them. What they're earning off of, what percentage. So, 72% is off monthly recurring revenue, which is a subscription right now that is actually a declining portion where they're getting a lot more money now from Shopify Plus, which is good for them. So they're getting a lot more big brands included in there, which is pretty significant. Obviously, it's a good process, or really a good program for the entrepreneurs involved. But when you get big brands in there, those are your recurring revenue just beast, because they're paying so much for that subscription. And they're also getting a lot more from apps, themes, domains, and the Shopify Plus platform fee revenue. Cool for them. I love it. So, strong and consistent growth in GMV. So, that is gross merchandise volume, represents the total dollar value of orders processed on the Shopify platform. So, $61.1 billion of items were processed through the Shopify platform, through payments, through websites, through all of that. Very exciting, which is a overall 49% year over year. In terms of that, they did $7.7 billion in 2015, so very big change there. Nearly 10 times the growth. Again, definitely 8 times the growth. Love it. So, and not only that, here's their adjusted gross profit. That's right. This company's trying to rake in the dough. This is the adjusted number, but that's okay. Operating leverage. So overall, you see a decrease in the overall operating expenses, which is good. Good stuff. Overall, still spending just about as much on each, so around 9% of those expenses. They're 8%, or 16%, I should say, for research and development. Cool for them. So, annual cohorts provide strong foundation for growth. Revenue by cohorts. We're talking about cohorts right now. So, merchant revenue growth, driven by GMV growth and expanded wallet share, has offset revenue loss from merchants leaving the platform. So, obviously, you see here, they may have people, not quite as many, but they're trying to increase the programs or the packages that people have that are involved in it. Interesting to look at. So the tailwind stuff, it's risky stuff, or really the helpful stuff. So the tailwinds will help them scoot forward. Normally you have, tailwinds, headwinds. Headwinds are what's holding you back. The tailwinds are helping you. A rise in self-employment, really good for entrepreneurship. People who are a lot more self-employed through the internet right now, and something like Shopify is a good, very good platform for them. E-commerce growth, obviously this is their platform, and as e-commerce continues to grow rapidly, it's a good platform for them to be on. And consumerization of the enterprise. Cool for them. Now, their headwinds are opportunities. You see they have an opportunity in international, share of the wallet, and machine learning. Got to get some artificial intelligence going in this platform. So, multi-channel commerce platform that enables merchants of all sizes to sell to anyone. Large and growing opportunity. That's a large and growing opportunity. So, success-based business model that puts merchants first. They have tens of billions of interactions accumulated over 10 plus years, now being leveraged through machine learning. So they're learning what people are using the platform for and how they can better serve people, which is very good for them. They're engaged in expanding partner ecosystem that is difficult to replicate, and they're well-crafted for simplicity and scalability, so they could just keep growing. Just keep growing. It's a simple, really simple process. What they do is not simple, I should say, but it is easy for them to grow the platform. They make it easy for themselves to grow the platform. It's not going to take too much for them to. And a product-driven team focused on making commerce better for every single person. They want to make commerce better for everyone through many different things. And obviously, you have your appendix. What we like to see, I look at this gross profit number, and you look a very big increase in gross profit. If you're looking from year over year, very good stuff. I love to see it. I really like seeing it. So overall, these numbers are quality. I mean, what can I say? What else do you want me to say? What else do you want me to say? I am excited for them. I don't like the stock. I don't like the valuation of the stock, but this is a company that's doing extremely well. It's doing a great job. I'm not going to recommend to buy the stock right now, but we'll see if that price drops. If not, who knows? Regardless, though, this thing's just a little bloated, and it really is for that future growth prospect because I think this company will be a beast in the future. I'm just scared of the valuation right now. I'm sorry, but that's all I got for you, so I hope you enjoyed.